Welcome back to XRP Insider. Okay, let's get right into today's explainer because we are tracking a massive battle that's currently brewing right beneath the surface of the crypto market. If you've been watching the momentum over the last 24 hours or really just keeping a pulse on the broader financial space, you already know something big is up. But, it's not the kind of wild, explosive movement we usually get excited about. Instead, it's a really tense, calculated standoff. So today, we're going to map out exactly what is going on, where the heavy resistance actually is, and why certain assets are coiling up for what could be an absolutely massive move. So why is the crypto market suddenly holding its breath? It's a vital question to ask, mostly because if you just glance at the top-level numbers, the broader market actually looks pretty stable right now. Everything seems calm. But as we all know in digital finance, that surface-level stability is a complete illusion. There is an intense underlying tension building up for a major directional move. We're sitting in a market that is essentially waiting for a clear signal. The capital isn't leaving, right? But it's not aggressively pouring into new positions either. It's holding its breath, waiting to see who actually wins the tug-of-war playing out at the very top of the market. And that tug-of-war brings us right here to $79,000. I really want to anchor your attention on this crucial number because this isn't just some random price point on a chart. This is the exact ceiling where Bitcoin buyers and sellers are violently clashing right now. Literally within the last 12 hours, we saw this really sharp, aggressive move upward toward this level, immediately followed by an equally fast rejection that dragged Bitcoin right back down to the $78,000 zone. This is a classic battleground. When you see a specific price acting like a brick wall over and over again, it tells you the market is heavily divided. And the tension at this exact number is what's keeping the rest of the crypto space on pause. Section 1. The Bitcoin battlefield. High volatility at resistance. Let's quickly look at the mechanics here before we dive into the broader market impact. We have experienced pure whiplash over the last few days. Tracing the timeline, it hasn't been a straight line at all. It's been a total roller coaster driven by heavy macro events. After a pretty quiet weekend, strong momentum pushed Bitcoin up to around $79,500 on Monday. But sellers aggressively stepped in, and by Tuesday we had slid all the way under $76,000. Then we hit Wednesday and the Federal Reserve meeting. Now, even though interest rates stayed unchanged, which, by the way, the market fully expected, investor sentiment is so sensitive right now that just the event itself caused a sharp surge towards $78,000 before dropping under $75,000. Just total whiplash. By Thursday and Friday, global developments stepped in. Reports of a peace proposal from Iran to the U.S. sparked a geopolitical bounce, pushing it back up, giving traders some confidence. Come Sunday, we briefly broke above $79,000 on diplomatic updates, only for skepticism to yank the rug out again. It's just repeated rejections based on massive macro swings. So what does this actually mean for the money sitting in the market? Well, despite these chaotic rejections, Bitcoin's overall market cap is still relatively flat, around $1.57 trillion. But check this out. Bitcoin currently commands 58.5% of the entire market. This tells us a really fascinating story about investors' psychology today. Capital is heavily parked in Bitcoin. Even though it can't break through that resistance, traders aren't fleeing to cash, and they aren't mass rotating into altcoins just yet. They're playing it safe, keeping their funds in the biggest asset, waiting to see if that $79,000 wall finally crumbles. And this perfectly illustrates the divide in the market right now. It's a real tale of two assets. On one side, Bitcoin is fighting this loud, volatile, macro-driven war at the top. But on the other side, XRP is quietly coiling like a spring, moving sideways. And this coexistence actually ties perfectly into what Ripple CEO Brad Garlinghouse just said at a major crypto conference in Miami. He made huge waves by explicitly stating he has never been in quote-unquote XRP maxi. In fact, he openly backs Bitcoin and other chains, calling out crypto tribalism as something that actually harms the industry. It's a super mature take. He's basically saying the success of one doesn't require the failure of another. And right now, the charts reflect that exact sentiment. While Bitcoin fights its battle, XRP is quietly consolidating. Garlinghouse made it clear that while he supports a multi-chain world, XRP remains Ripple's absolute North Star. Section 2. The XRP powder keg. The calm before the storm. Let's pivot to XRP's specific setup, because the real opportunity might be brewing right here. So the crucial point for XRP is sitting right here at $1.40. It hasn't made dramatic, headline-grabbing moves lately. It's just steadily hovering. But in technical analysis, this sideways action is exactly where explosive setups begin. The pressure is building, and fundamentally, the ecosystem is backing this up. In Miami, Garlinghouse reminded everyone that Ripple is still one of the largest holders of XRP, meaning their success is completely tied to it.
He also pointed out that their recent acquisitions aren't random. They are highly strategic moves designed to accelerate XRP adoption and boost global liquidity. On top of that, he expressed genuine optimism around positive regulatory momentum in the US. So when you combine that solid fundamental groundwork with this tight consolidation at $1.40, it usually means the market is accumulating energy waiting for the right spark.
When that spark finally hits, the stored energy is going to release. Right now, analysts are tracking two clear paths. On the bullish side, if the broader market gives the green light, projections show this buildup could trigger a powerful breakout, pushing XRP toward $1.82. And what's adding to that bullish fundamental case is Ripple's approach to AI. Garlinghouse stressed that they are using AI not to replace workers, but as a massive growth tool to build faster and reach more users. That operational speed is a huge plus. But we have to look at the bearish warning too. If market momentum sours, say Bitcoin gets devastatingly rejected and drags everything down, XRP's coil could break downward, potentially dropping toward $1. Either way, this sideways phase is highly temporary. The move, when it happens, is going to be sharp. Section 3. The altcoin waiting game. Finding pockets of action. While Bitcoin and XRP build up their respective pressures, let's briefly scan the rest of the market. Here's a rapid-fire look at where smaller pockets of capital are flowing. Starting with the stable giants, things are mostly steady. Ethereum is holding strong above its vital $2,300 support. BNB is hanging near $620, and Dogecoin is sitting quietly around 11 cents with very low volatility. They're totally in wait-and-see mode. But over in the winners category, we're seeing some isolated breakouts. TRX stands out with a solid 3% gain, up to 34 cents, and Algo is actually jumping with double-digit gains, catching the eye of short-term traders. Conversely, the losers, like BCH and Hype, are seeing noticeable declines. It's a great reminder that even when the macro market feels calm, capital is constantly shifting, looking for temporary homes while the giants prepare their next moves. Zooming all the way out, we hit this massive number, $2.7 trillion. That is the total crypto market cap right now, and it remains incredibly steady just under this level. It perfectly reinforces everything we've talked about today. The market as a whole is officially trapped in a tense consolidation phase. But remember, consolidation does not mean inactivity. It means the market is absorbing all the macro data, all the geopolitical headlines, and storing up the energy for the next major leap. Which brings us to our final thought for this explainer. Which breaks first? Bitcoin's heavy resistance or XRP's tight consolidation? All eyes are glued to these two setups. Will Bitcoin finally smash through that $79,000 wall and pull everything up with it? Or will XRP's tightly wound spring trigger first, acting as the catalyst the altcoin market has been desperately waiting for? Whichever asset makes the first definitive move is going to dictate the sentiment and momentum of the entire space heading into next week. Keep a very close eye on these charts, because the calm is not going to last much longer. Thanks for joining me on this explainer, and I'll see you in the next one.